For a number of reasons, the firm Meta has been in the headlines. Other than allegedly taking bribes and stealing user accounts, a declining stock price, huge layoffs, an increasingly ineffective business model, and of course, a falling metaverse project, their most recent financial report indicated a 52% reduction in the net profit for the quarter. If everything stays the same, it appears that the corporation that everyone despises will face major difficulties. Hey, welcome to Stock Market Mate. Today we'll talk about why Meta, one of the biggest companies in the world, is dropping the market. Before we get into it, subscribe to the channel and hit that notification bell to help us beat the YouTube algorithm. If you're done with that, then let's get right into it. Investors in Meta are not all pleased. The revenue and profit have declined due to flat growth. Meta had a worth of roughly $1 trillion less than a year ago, but it's only worth a third of that now. In other words, the decline has been so severe that the stock price has returned to January 2016 levels. You would have lost money if you had invested in Meta at that moment without taking profits. Meta has had the worst year of any stock in the S&P 500, falling over 70% this year. We have to go all the way back to 2005 to have a thorough understanding of why Meta is collapsing. At this time, Mark Zuckerberg would receive assistance from Facebook's then-president, Sean Parker, as he tried to find his way around Silicon Valley and take full leadership of the business. Sean would advise Zuckerberg on how to structure the business so that he would effectively rule as king. He had the final say even over the board of directors. He was impenetrable and would remain so indefinitely. However, the company would suffer as a result of this dictatorship. Users began switching from PCs to cell phones in the 2010s. Despite Facebook's adjustments, Mark Zuckerberg believed the company might have been a bigger participant in the hardware industry. In 2013, Facebook attempted to launch its own smartphone, but the public rejected it. However, when Zuckerberg witnessed an Oculus demo in 2014, Mark would realize he wanted to try something new. He was sold. The future of computing, in his opinion, would be in virtual reality. He would subsequently invest heavily, purchasing Oculus for $2 billion, renaming the business, and allocating $10 billion annually to research in order to realize his ambition. Herein lies one of the key problems. Because Mark was the company's king, no one could stop him, even if they thought it was a horrible idea. A widely used metaverse environment for the masses appears likely, given the direction that technology is generally headed, but there is an issue. Is this future 5 or 15 years away? Meta might be able to hold on and ride it out if it's 5 years distant, but if it's 15 years away, this is a serious problem, and shareholders won't put up with it. Investors get the impression that Mark Zuckerberg is relying too much on an idea that the world isn't ready for. Apple was able to resolve this problem. Meta doesn't compare, at least not yet, to the iPhone in this area. Although they are doing some really creative stuff with the hardware and have successfully sold over 10 million VR headsets, which is great. However, Horizon Worlds, Meta's flagship offering for the metaverse, appears terrible from a software perspective. This was created with an investment of over $15 billion. We agree with Zuckerberg that VR has the potential to link people in a way that other technologies just cannot, but there is still a lot of work to be done. The vice president of Horizon Worlds retired in August 2022. The behind-the-scenes operation is not being spelled with the greatest confidence. The second problem is the disabling of meta-targeted advertising's primary revenue stream. And once more, in order to completely comprehend this, we must travel back to 2008. Sheryl Sandberg, a former Google and executive, would join Facebook as COO this year. She would counteract Mark's reckless behavior in those early days, but she also played a key role in developing the elements that propelled Facebook to new heights. Extremely effective advertising based on users' personal data worked so well that the very first employees became wealthy. This was beneficial for the wallets of those who worked in Meta, but detrimental to consumers. Users were furious when they discovered they were being exploited, but it didn't matter because the company was making money like crazy. Without realizing it, Meta had become vulnerable to any outside entity that stifled its data collection. This is exactly what occurred in 2021. Tim Cook would mandate that iPhone users be able to turn off ad targeting, and Meta would lose billions. Because iPhone users often spend more money than Android users, this action by Apple had a significant negative impact on Facebook. David Wenger, the chief financial officer of Meta, claims that advertisers are currently starting to migrate to Google with the vanished earnings of Meta. Each was fully exposed and available for clear inspection. To be very honest, Meta is a company that isn't developing its main products. The development of the user interface and the user experience is put off. Instead, Meta concentrates on taking other features of other platforms and integrating them into Instagram, including Reels from TikTok. However, it is a difficult undertaking to compete with one of the top social media algorithms on the planet. Reels don't generate as much revenue as Instagram's other services do. In terms of the user experience, Instagram has become overrun with advertisements and is veering more and further from its initial concept. The firm used to lead social media innovation throughout its first 10 years as Facebook. By the beginning of 2022, this phase was obviously ended. The longtime CEO and adult in the room, Sheryl Sandberg, departed Meta. Mark Zuckerberg is currently a monarch without any restraints. Facebook recently cut loose 11,000 employees, or 13% of its workforce. Even while increased interest rates are decimating high-risk investments like big tech, any stock falling by 70% in a year is nothing to sniff at. According to Zuckerberg, excessive investment was the problem. He doesn't appear to think that investors would be concerned about doubling down on the metaverse. On November 10, he would tell investors during a call that he believed the rise in covert e-commerce would be long-lasting, and that he had therefore expanded his investment significantly. To cut a long story short, a monarch with tunnel vision is causing Meta to experience an identity crisis. What can be done then? From the outside, it appears that some introspection is necessary. Meta is already two companies, thus Mark ought to maybe accept this. One business aims to build the metaverse and is purely technological. The CEO has stopped paying attention to the other company, which is a social networking and advertising company. Perhaps it's time to have the social media component operated by a separate CEO as a true business. The fact that Meta still has close to 4 billion customers is the last glimmer of hope. There are a lot of possibilities for improvement. However, will they? Additionally, do we even want that? Let us know your thoughts in the comments section. If you found this video helpful, kindly click the like and subscribe button. Thank you for watching, and we'll see you in the next video. If you enjoyed this video, you're going to want to watch one of these two videos right here. Enjoy!